It looks like gold is really, what the move we saw below this upward channel looks like it was a false breakout just below 4,000, and now we're going back up. And silver this morning, and it's 7:38 a.m. London. It was lower earlier, despite gold being up. I think they're still trying to keep gold from going much higher by smashing silver, which is easier to do. This is a tactic that I've noticed for years that the bankers do. But even silver now is back up. So as I speak here, silver is at 69.20, up 20 cents, which isn't that much. It's only up 0.25%, but gold, on the other hand, is up 1% at 46.50, and up almost $50. And even before the bull market started in the beginning of the century, you can see that the gold and silver miners were a lot stronger than they are now. Compared, in terms of the gold price. So with gold where it is and silver, it's amazing that the miners, I think that's very bullish. What that's telling me is that the miners are going to start to really outperform the gold price. And that means that the gold and silver price are going to continue to do well, because if gold and silver were going down, the miners wouldn't be doing well. And I think the general investment world is finally going to wake up to the fact that there's a lot of opportunity in gold and silver miners.
The bigger story underneath the surface right now might actually be what's happening with the miners. Gold has shown real resilience, and silver is starting to regain some momentum too. But the mining sector still looks relatively overlooked compared to the metals themselves. That gap matters, since miners tend to benefit disproportionately once metal prices stay strong and operating margins start improving. There's also broader investor interest flowing back into the sector, as ongoing concerns around bonds, currencies, and inflation continue shaping asset allocation decisions. If precious metals hold on to their strength, mining stocks could end up being one of the more interesting places to watch as the next stage of this cycle unfolds.
And of course, they have loads of free cash flow, a lot more than any other sector in the stock market. And it's crazy that we're down here in terms of valuation. So I wanted to put this through to you. What is my strategy managing what I have, my savings? It's not putting my savings all in the miners. That surely isn't the case. I'm still favoring having physical gold and silver outside the system. But I think having miners is a good speculation. But I wouldn't personally be betting the house on it. I have a fairly good percentage, but it's a percentage that if I were to lose everything, and I don't expect to lose everything with the miners, I could still survive financially comfortably. But I think this is going to provide so much opportunity, this next leg up here in the precious metals, especially for the miners. But if you're not involved in gold and silver yet, nor the miners, what I would do and what I did when I started out over 20 years ago is first get physical, learn about gold and silver, learn about the history, or learn about money. I thought Scott Bessent was fighting the City of London. Well, the City of London doesn't seem to think that he is, because the FT is a mouthpiece for the City of London, but that's a different topic. It's a very interesting editorial, and I'll go through it with you and see what you think. So it says here, the writer is the U.S. Secretary of the Treasury. And he goes on to say, In 1943, the Allied powers convened the Tehran Conference to plot the course of an uncharted act. As Roosevelt and Churchill waged a campaign that would culminate in the Normandy landings, they asked themselves what could be done to bring the greatest pressure to bear on the enemy. So, yeah, he's comparing Iran to the Germans. I think it's a completely, I don't think it's a good analogy, comparing what's going on now to World War II. History has returned to the question, that question to Tehran, and the moment has arrived to answer it with the full weight of American resolve. President Donald Trump, the overwhelming might of our military have significantly dismantled Iran's military capabilities and weakened its nuclear program. Now we're entering the end game. At dawn begins an economic D-Day, the single greatest financial offensive ever marshaled against an adversary.
This is where things get particularly interesting, since the economic fallout of geopolitical decisions can sometimes matter just as much as the military dimension. The language being used suggests financial pressure and sanctions could become a much bigger piece of the overall strategy, with real implications for currencies, commodities, and global markets. It's also worth watching how other countries respond, since moves like this tend to ripple well beyond whichever country is being directly targeted. From an investor's standpoint, that makes the relationship between geopolitics, energy markets, and precious metals increasingly worth paying attention to.
Fomented the most coups and regime changes, and the country that's invaded the most nations in the last 7 years. It's not Iran. Americans, unfortunately, have been led down this path by its corrupt leaders. Actually, it's America that squandered a lot of the wealth for its general public. It's why the top 10% or even top 1% own most of the wealth, and the bottom 90 in the U.S. is suffering with what they call the affordability crisis, which is really a currency debasement crisis. So, I don't think the rest of the world is going to buy this. Maybe some of the U.S.'s staunch ally, the country that really started this war against Iran, they'll buy into it. I don't have to tell you who that was. Beyond its borders, the Iranian regime maintains a network of proxies that perpetuate its terror. Anyway, the U.S. has paid an especially grievous price, but we're scarcely alone in facing this scourge. Too often, though, we find ourselves alone in our resolve to thwart it. President Trump has decimated Iran's economy, to a point where the rial has never been weaker, inflation has rarely been higher. Well, the rial has been weak, and they've had inflation for years. It hasn't changed anything.
The more important point here is that economic pressure rarely stays confined to a single country. It tends to ripple outward across currencies, commodities, trade, and investor sentiment. The affordability issue mentioned earlier is also worth keeping an eye on, since persistent currency weakness and inflation can gradually chip away at purchasing power and reshape where people go looking for protection. At the same time, how effective sanctions and economic pressure actually turn out to be ultimately depends on whether other countries follow suit or push back against the same approach, which makes the broader geopolitical and monetary fallout just as important as whatever's making headlines in the moment.
Especially not China. He tried the same thing with China to isolate China last year, and China, they've cut off the rare earths. This is going to make things even worse. Sometimes I think maybe either he's got hubris, or he's doing this on purpose to bury the dollar even more, or maybe it's just something to start the week with to weaken the oil price and rally the treasuries a little more. I don't think this is going to really work, and if anything, it's going to make the other countries, especially the BRICS and the global South, even more determined to have options. Have options in terms of which currency and which assets to trade with. And it's not going to be the dollar. They're not going to abandon the dollar, I guess, right away, but there's going to be a huge move out of the dollar. And I don't think the allies of the U.S. are that keen either. They didn't start this war against Iran. It was a small country in the Middle East that did. Anyway, as I said, this is not going to make any difference. The war is going to keep going. And if anything, I think the dollar is going to suffer big.